How's it going? I'm Ryan, and today I'm going to go over the two trades I took on NQ. My first trade was a small loss. My second trade was a regular sized win, but luckily the loss is smaller than the win. That's proper risk to reward management. And we ended up with a profitable day today, up just under $100. So I'll go into the two trades that I took and why I took them in just a second. First, just going to do a brief overview of some of the levels I was watching. So first of all, we have last Friday's price action. Green level, yes, Friday's high. Red level, Friday's low. Then kind of in between, we have these blue levels. All of these blue levels are derived from the 8-hour chart. So I use the 8-hour time frame. And then I use a bid ask volume candle, or it's not candlestick, but bid ask volume chart, I guess is what it is. And then from there, I have an indicator that shows me the point of control, or just the price at which the most volume was transacted in those 8 hours. And I use those points of control, or those high volume nodes, as levels of support and resistance. Reason being, price needs liquidity to move. Where you have a lot of liquidity is the area where you have the most volume. It's just the way things work, right? If you have no volume, price isn't going to do anything. If you have a lot of volume, price is going to, react accordingly. Price moves through areas of low liquidity to seek out areas of high liquidity, etc. So you can kind of use these high liquidity areas as targets, or resistance, support, etc. And if I just back out on the 5-minute, like I said, these levels are all derived from volume, not looking at price action whatsoever. But you can see how price reacts to these levels. So use it as targets. But that's how those levels are derived. I'm not going to go through each and every one of them. And then we have these orange and yellow levels here. These are all from the after hours value area, right? So we have the value area low here, the value area high here. We have the point of control down here. I turn that off and I just leave the levels, so I have them as a reference. And this is kind of funny because both my trades went counter to this idea, but this value area, or the overnight value area, is helpful in determining the trend, right? Obviously, it's pretty easy to determine the trend if you're making higher highs, higher lows. But if price is displacing above this value area, that shows that there's a buy side imbalance, aka there's more people buying, which is more likely to be a uptrending day. If price is below this value area, that's an indication of a downtrending day. There's a seller imbalance, there's more people selling than buying. And if price remains in this value area, then you can kind of use these levels as targets that price will kind of move between. So that plays into my very first trade. We'll hop into my very first trade. Just wanted to go over those levels and kind of what we're looking at here. We were within Friday's high and low, so we were within Friday's range. We also had no news. Pretty low volume day overall, so the moves weren't crazy. And pretty small range for today's price action as well. So let's hop into it. I'm gonna make this 5-minute chart a little bit bigger, and then we'll back out and we'll look at 1 minute, etc., and try and talk about what I was watching. So we open the day, come down and test this level right around like 742 or so, hold that really well. We reject off the value area high. So at this point, we're within the value area. We're kind of holding this level of support, rejecting this level as resistance, right? We then come up, test this level again, reject, close right near this next level at 774, 775. So no real direction as of yet. We're still within the value area. Seeing this as a potential choppy day, right? Maybe a rangy day. The next candle, we move higher. We move higher and we close right at my level of 799, we'll call it, 798.9. It's, whatever. We close at that level, try to push above it, can't close above it. The following candle tries to push above it, sets a new high on the day actually, but then crashes down pretty hard and closes below this level. Following candle, we open up and we start to test this value area high again, and I took a short here. And I will explain in a little bit more detail, but I took a short here, one, because what did we have? We had this first candle rejecting it, second candle rejecting it. We had a false breakout, right? We tried to break out of this area and fell right back into it. And then we pushed up and retested again. This trade was a loss, and I could have avoided this loss if I had followed one of my main rules, and that's to wait for 5-minute candle to close to confirm my trade idea, right? So if I'm looking for a rejection here, I would want to see a 5-minute candle try to test that, similar to here, right? Try to test it, fail to close above it, and then I would enter after I get that confirmation on the 5-minute, which I did not, right? This 5-minute candle actually closed pretty strong, and then we'll look at the volume profile of this 5-minute candle as well, and neither of them really aligned with my trade. So this was kind of an ill-advised trade in the first place. Let's take a look at it. So I kind of explained it, right? We tried to break out of this value area. We fell right back into it. If I pull up the 1-minute chart, and this might take me a second because I'm going to have to reverse it all the way back. Put her in reverse, Terry. Let's see what we got here. This is the opening. All right. And this shows a little bit better, right? You can see we open, we test these levels, reject down to this level, hold this level, come up, test these levels, reject this level, try to get a breakout, reject this level, fall right back down into it. And as we come up, we test this level. I entered after this 1-minute candle, and I should have waited for the 5-minute candle to close. Once I got this weak kind of test of these levels on the 1-minute and the rejection, I entered short on the following candle. I didn't hate it because I was able to enter right at that level, and my stop unadjusted. I usually have a base stop at 15 points, take profit at 30 and 40 points. That gives me a nice about 2-to-1 ratio. And when I did that, I could enter directly at this level, and it would place my stop just above this little swing high on the 1-minute. And I was pretty happy with taking that risk. But like I said, it was ill-advised because the 5-minute actually closed pretty strong, right? We have a nice long lower wick. We closed above both of these levels, and we have good volume. That's not really what I want to short. So that was a little early, and I was not very patient. As well as this is another thing. We're looking at the volume profile of this candle, right? And this is going to be confusing if you've never seen this before. It's like hieroglyphics, I understand. But I'm just going to give a very general overview. Where this volume is matters, right? If you see, and I'll show you another example, but this isn't 100% accurate. Nothing in trading is, but it's just a good kind of layer to peel back when you're looking at price action. Is if I see a green candle here come up and test this level, and you can see a lot of that selling. You see that big selling spike right there. It's pretty cool. I would want to see a lot of this volume. Like, that's pretty bullish, right? It's kind of right in the middle of that candle body. We close well above it. No problem there. If that volume was way up at the top here, that would be concerning, right? Because that tells me that we pushed all the way up here. A ton of volume happened at the top of the candle, and then we couldn't close higher than that volume, which lets me know that that's not buying volume. If it was a ton of buying volume, then price probably would have pushed higher than that point. So likewise, the following red candle, right, this red 5-minute candle, big selling candle, and look at where all that volume was, is right around this level that I would expect to act as resistance. That makes a ton of sense, right? We push up to this level, we experience a lot of selling around this level, a lot of selling volume, and what is price's reaction? The price plummets. That makes sense to me, right? That's a nice bearish indication. So the volume being highest at the top of a red candle is pretty good bearish confirmation. The volume being highest at the bottom of a green candle is pretty good bullish confirmation. If it's right in the middle, it's kind of, you know, it's like a doji. It doesn't really tell you one thing or another. I'm not going to make a big assumption out of that. But likewise, and I'll show you this example right here, it's a good way to spot bounces and reversals, because you can see that volume shift, right? So if I just pull this up, and we're just going to look at this. So we're just going to look at this series here, right? We have kind of volume right in the middle of that green candle. We're looking at this candle down into this move and this bounce. This is exactly what I'm talking about, right? We have price falling, and then we start to get these long wicks. Price starts to slow down a little bit. You know, it's falling pretty aggressively, and it starts to round out and form a base. And what do you see? You see a lot of volume down in here. And also, what do you notice? On these 3 consecutive candles here, here, and here, these 3, you see a ton of volume at the bottom of this candle, this hammer. You see 2 volume levels kind of around that like 826. And what do you notice? It can't close below it. It keeps trying, getting pushed up, trying, getting pushed up, trying, getting pushed up. What does that tell me? That tells me that there's buying in here, right? So it's a good kind of confirmation. Like the price action tells you that as well. And you can see a big volume spike on this candle. You actually see increasing volume on this drop as price kind of slows down and rounds out. But then if you take a deeper look at the price in which that volume is happening, because this just shows you, yeah, a decent amount of volume happened over this 5 minutes, but you don't necessarily know where that volume happened. But combining price action with this volume profile, and you can say, okay, there's quite a bit of volume coming in, and price just holds this area. It's not making lower lows. In fact, it's making slightly higher lows. And that volume is there, showing that price is failing to close below it. If that was a lot of selling volume, you would think that price would kind of continue to fall, right? That's just a little anecdote as to why this wasn't a great trade, because when I took it, this candle had not closed yet, and this volume node was right in this area where I would expect resistance to be, which I liked, because I was like, okay, we fall, we come back into this area, we're testing the upper range of that value area, there's a lot of volume there, price is going to continue back down. But price actually closed above both of those levels, closed above that volume node, so that's not ultimately that bearish. And then the following candle stopped me out here. You can see we pushed up, we kind of held this value area and then moved up higher. This would have been a good long opportunity had I not already been short. But you know, that's here or there. Can't change the past. But that was my first trade. I could have been a little bit more patient and had better results. My second trade, so we got a big move up after I got stopped out. We kind of broke higher. Then we tested this level, kind of consolidated for a little bit. I was not looking for a short here, and I'll show you why. Because I wasn't seeing what I wanted to see on the volume, right? The volume is still pretty bullish. We were closing at or above those volume profiles and making higher lows and slightly higher highs. So I'm not really seeing the rejection that I want, right? And if you're looking at the 1 minute, we're just kind of moving sideways. We're not making a lower low, and the volume is really low. So didn't take a trade here. Then we move higher. We almost make it up to this next level. And I guess another thing is I watched the 15 minute, right? And the 15 minute was pretty bullish throughout this. I took another short here, and the reason why I did is because a few things. First thing I notice is as we approach this level, we start to get these long upper wicks telling me that price is trying to push higher and failing, right? That's not really a sign of a super strong uptrend. Likewise here, you see that those long lower wicks on this fall and then a reversal to the upside. That's not a very strong indication of a downtrend, right? So this started to show me weakness just purely through price action. When we started to get on the volume profile here, you start to see, even on like these green candles, you start to see those volume nodes being higher up in the candle. And you see price closing below where those volume nodes are, right? So if we look at like these two, you see like volume profiles right there. These two candles, these two right here, are failing to close above that. This next candle, same thing, failing to close above that. And then we get a little bit of a rejection. First red candle since like the third of the day or fourth candle of the day. So we start to see some of that weakness in price action. We start to see some of it in the volume, right? The price having volume high up in the candle and not being able to close above that, which is not necessarily what you want to see in a uptrend if you are long. So that's one thing. Another thing was I'm looking at the 15-minute, right? And what do we see? We see a nice bullish move. We see candles getting smaller, right? This candle's smaller, has a long upper wick. This is actually a nice reversal, like a shooting star, where we have a long upper wick. We close low near the low of that candle. So we're kind of making a move up. We're rounding out. We're rejecting near this next level of resistance I have around like 898 or so. And we're starting to move lower. So the volume was looking good. Price action on the 5-minute, price action on the 15-minute. Everything was looking like we were due for a pullback. And then if I go into the 1-minute chart here, what do I notice? Well, this is what I noticed. I noticed we have our high. We have a series of higher highs and higher lows, right? But then we break that. We break that with these red candles here because we create a higher high, the highest point of the day so far. We have this little swing low on the 1-minute. We break that. We create a lower low, or excuse me, a lower high, a lower low. This is a lower high, and I entered on this lower high here. Now, where was I targeting? My first target was just 30 points. Whenever I set an order, I have a 15-point stop loss and a 30-point take profit initially, and then my runner is just it's adjustable. It's set to 40 points, but sometimes I adjust that based off of price action, based off the chart, based on levels that I think we could hit. So my entry was right about here. Stop loss, I actually moved it up a little bit so you can see where it is. I actually adjusted it just so it was above high a day. It was about 20 points as opposed to 15. So I had a little bit more risk on this, but I just wanted to have appropriate risk. You know, if we broke high a day again, then obviously this little downtrend that we're getting is no longer valid. So about 20 points of risk. My first take profit was at 30 points here. And my runner was at 815, which is right here, or just above that volume node on the 5-minute. Reason being, if I'm looking at this big move up, right, we have a big move up and then we have kind of some sideways movement and throughout here. If I expect price to pull back, I expect price to pull back into a point of like high volume. And I was watching this level right here, this like 835. And it's pretty interesting. If I, 835, you look at that, there's a big gap. You see the volume's really thin in here. When we get that big move up, chances are you're going to have kind of areas where there's voids of volume, essentially like areas where not a lot of volume was transacted because price moved through that area so quickly, right? And when price moves through an area quickly in one way, it can kind of move quickly through it the other way. For example, if we get a big move up, there's not really support in here. Like, where would you identify support in here? Maybe this wick. You obviously have some support in here. But once you get below kind of these wicks, like what would you target? Maybe this level down here, just based on price action, that is. But I was basing it off of volume. So I was targeting this level around 815. I put it a little bit above that point. I put it right a few points above. That would have been 60 points from my entry. So I was looking for a nice win on the runner. You can see that we get a move up and it actually stopped my runner out for a small gain. I put it at about 15 points. I was kind of trailing it as price was moving lower, but very slowly. I wasn't sure that we were going to get that break lower. Funny enough, we stopped out, kind of went back up to my entry just about, and then collapsed all the way down and missed that runner target by about 2 points. Mine was 815. It stopped right around 817. But yeah, just been having a good time watching this volume stuff, watching how price reacts to it. You can kind of see how just even on the 5-minute, how these volume levels act as support and resistance. How you can kind of predict this bounce here, right? We start to get that price action indicating potential bounce. We get the volume indicating potential bounce, and then we get that we get that inevitable bounce. Yeah, it's kind of difficult to trade today. We got a nice move to the upside. Everything after that was pretty choppy and pretty not ideal. Not the best price action to trade. So hopefully we get some better price action this week. But the point of the story is, I've been trying to be more patient. I've been trying to be more patient, and I've been trying to be more accepting of losses, and not seeing a losing trade as like me being wrong or me not knowing how to trade. Or when you lose a trade, obviously it didn't go the way that you expected it to. But trading isn't an exact art. Nobody's 100%. You're going to take losses no matter how good you are. So it is something that is just a part of it. It's essentially it's the operating cost of your business, right? You're not going to run a business with zero overhead. I can't even think of a single thing, unless maybe like, yeah, I can't think of a single thing. You could do motivational speeches, but you still have to pay for travel, to get to the venue. So there's no such thing as a zero overhead business. And I just see losses as kind of part of your overhead. But if your overhead is much more than your profit, then your business fails. So we got to keep that overhead low, and was happy to do so today. Had a small loss, came back with not even a huge win, just a regular sized win, but was able to end the day up $98, and we're back about $1,000 of profit, just like $53 less than $1,000 profit. We're trying to hit that 2,600 so we can get our first payout, fund some more accounts, and try to scale this thing. But yeah, could have avoided this first trade. I hopped in a little early. Two things I'm working on are patience, waiting for that confirmation, only taking a trade that's really kind of standing out to me, and accepting losses. Those are my two things I'm working on. Patience, being better with losing trades. And I was a little impatient, but I handled this losing trade really well. I didn't chase anything. I didn't FOMO. I waited until it seemed like we were going to get a pullback. With such a rapid move to the upside with no pullbacks, I expected that we'd get a bit of a bigger pullback. It just made sense. Just like, had we been making like higher high, higher low, higher high, higher low, higher, I probably wouldn't have faded this. I would have tried to catch a higher low for a long, right? Would have tried to go in the direction, but we didn't really get an entry long because we had such a fast move to the upside with no pullbacks. So didn't see any entries long here unless I entered down here. That probably would have been a good entry. I mean, hindsight 2020, but where I shorted, I probably should have longed. But it is what it is. It's all a learning process, and we ended the day with a win, both kind of like metaphorically and profit wise. So this video's gone on too long. I apologize, but that's what I got. I'll see you tomorrow. I do stream live Monday through Friday on this account. If you want to hop in and join the live stream, please do. I'd love to have you. Thank you so much for watching. Hope you have a great rest of the day. Peace.